Welcome to episode 61 of Let's Talk Bitcoin, a twice-weekly show about the ideas, people, and projects building the digital economy and the future of money. Visit us at letstalkbitcoin.com for our daily guest blog, all our past episodes, and of course, tipping addresses. My name is Adam B. Levine, and the day is finally here. Long promised, much anticipated, wistfully let out the door, and featuring a guest performance by Zhao Tonged, I'm really pleased to share the Let's Talk Bitcoin for New Users episode. Stephanie and I joined forces for an hour-long conversation covering the nuts and bolts of Bitcoin in an easily understandable way. Our aim here is to create a show that can be shared with friends and family who might very much want to learn about Bitcoin, but don't even know where to start. We've got lots of ground to cover, but there really is one question that stands above all the rest. What is Bitcoin?
Bitcoin, that's like, so there's BitTorrents, and Bitcoin is like how you counterfeit money.
Bitcoin is, have you ever played Sonic the Hedgehog?
So it's like you steal. It's like how you steal money. I absolutely tell people not to do it.
If you like hit a block hard enough,
So, Adam, in the last couple of weeks, there's been obviously a lot of media interest in Bitcoin, and people have been finding out about Bitcoin for the first time. And actually, Let's Talk Bitcoin's numbers have gone up quite a bit. We usually get thousands of plays on each episode, but recently that's gone up maybe about tenfold. So obviously there are lots of people hearing about Bitcoin for the first time. And we thought it might be a good idea to do just kind of a newbie rundown for somebody who's not that familiar with Bitcoins and just welcome all the new listeners.
Yeah, it's a funny thing. You know, this will be airing probably on episode 61, and we've never actually done a new user episode where we sit down and for the entire episode go through comprehensively kind of, what is this thing, Bitcoin, that we talk about all the time at kind of a pretty high level. So yeah, I'm glad that we're finally getting to this and can shed some clarity on this issue and then use this episode, of course, as kind of an entry point for new users coming in the future. So hello, future listeners of Let's Talk Bitcoin.
Yes. Okay, so let's start out maybe with the most basic question of all. What is a Bitcoin and why does it matter?
To me, and again, this is like one of those kind of subjective questions, Bitcoin at its core is a digital currency, right? It's data essentially that lives on the network. In every copy of the Bitcoin software that's installed, a copy of the entire transaction ledger that's ever happened lives there. So Bitcoin really, it's like a record of money that lives on every computer of the person who uses it, which is a really interesting idea. The way that Bitcoin works at its core level is it's kind of like cash that lives on the internet, right? If you're standing next to a person in real life, then you can hand them a couple of dollars or, however much you want in cash. They receive it directly. It doesn't go through a bank when I hand cash from, me to you. And if I later want to put a hold on that, or if it was a fraudulent transaction, there are no protections that I can really call on. I can't call my bank and say, hey, can you please put a hold on that $10 bill that I gave to Stephanie a while ago? If you can get past thinking about money as credit cards and get towards thinking about money as cash, then you take that and you combine the concept with email. And it's like if you took cash and combined it with email, that's the core visualization, I think, for people who have no context, is it's doing for money what email did for mail.
Yeah, I really like the email analogy because that goes into the next thing about Bitcoins. Well, how do you move Bitcoins around? Well, they're not associated with Adam or Stephanie. They're associated with a Bitcoin address. And a Bitcoin address is like an email address.
Harder to remember.
Yeah. It's a string of kind of gibberish characters. And you can send Bitcoins to an address if you know what the address is. So anybody can send Bitcoins to an address if they know the address. But the only person that can move Bitcoins from the address and send them to somewhere else is the person who can prove their ownership over the address by having control of something called the private keys. It's basically like you can receive mail at an email address, but you can only send mail if you have your password and you type it in.
Right. The physical analogy for this, again, using the mail, is that like this is like a one-way drop box, right? Like a mailbox, like one of the ones where mail is collected for larger delivery, and you can put mail in at the top, but only someone with the key at the bottom can actually extract what has been put in. It's very similar here. And so that means that, on the one hand, you have to protect the key, because if someone else gets the key, then they can open the box and take what's out too. But on the other hand, it means that, like, if we make a cash transaction and I'm asleep at the time, well, then we can't make a cash transaction. But we can make a Bitcoin transaction because I don't need to be there. I can just go later with my key, access my account, and if the Bitcoin is there, then I'm able to spend it. I want to take a step back here and get a little bit more in depth to how Bitcoin works. At its core, right, Bitcoin, like cash, is an ownership-based system. So whoever owns the asset, whoever holds the asset, actually owns the asset. When it comes to Bitcoin, even though you might think you have them in your phone or on your computer, you actually don't. What you have is that key, that mailbox key or your password to your email account or whatever. It's that actually gives you the ownership. When I send Bitcoin to you, Stephanie, I'm not actually sending Bitcoin to you. What I'm doing is I'm taking my key, I'm unlocking these coins that I control, and then I'm transferring the ownership to you. But the coins themselves never actually move, because the coins themselves live on that blockchain that we've talked about before. When we're talking about a change of ownership, imagine if instead of having keys, these were like stamps, right? And every address had the ability to have its own stamp. And so essentially, when I send you Bitcoin, I'm taking my stamp and I'm covering it over with yours. And so as long as my stamp is the one on top,
right,
only I can affect it. I can choose what stamp goes over mine or if no stamp goes over mine. And so long as mine is on top, I own it. But if I sell it to you, then essentially what I'm doing is you give me a copy of your stamp, which is your public address, and I copy it over onto that. And now only you can access it. So even though this thing never moved, all we did was change who owns it, still technically the ownership changed and it moved hands. And because of that, it's able to do so very fast and very efficiently because, frankly, nothing actually moves. It's just a change of who owns it.
Right. Yeah. There was a great article that was published on letstalkbitcoin.com a little while ago called The Island of Stone Bitcoins. And it was basically an allegory about a tribe who uses some money, lives on an island, uses some money, and the money is giant rocks. And they never actually move. They're in the ground, just kind of recorded that so-and-so owns this rock or so-and-so owns this piece of a rock. And that's exactly like Bitcoins. And the way that it's recorded, who owns what Bitcoins or what address each Bitcoins are associated with, is by a public record called the blockchain.
So this public record called the blockchain really is the core of what Bitcoin is. It's the continuous record and the continuous ledger from the very first Bitcoins that were ever created back in 2009. Essentially, you can look at the blockchain and track transactions all the way back to that. Now, you might think this is hugely bad for privacy, and in some circumstances it could be. But because most people and anybody can, there's no cost to doing it, use essentially a different receiving address every time. So this is like if you had a different, mailbox address every time, and before you received a payment, you had the ability to give someone your new address instantly, immediately, and there was no additional cost for doing that. It would be very, very difficult to track and correspond because you can't tell which person controls which addresses. The same thing is very true here in Bitcoin. And, someone like myself who does a lot of transactions, because Let's Talk Bitcoin runs primarily on Bitcoin, I have thousands of addresses.
Literally, you can, at no cost, just generate a new Bitcoin address every single time you do a transact. And actually, that's a great practice if you want to maintain security and privacy with respect to using your Bitcoins. And there's no cost to do it. So it really makes it easy to just kind of separate each transaction into a separate address.
Of course, the downside to being able to create so many addresses is actually that this is why the addresses are so long and impossible to remember, is because in order to have that many addresses to allow people to have as many as they want at no cost, they have to be, I think it's 35 characters long and alphanumeric. And so the number of possibilities is literally in the trillions upon trillions. I don't even know if that's a big enough number. So it has its positives in that you get as many as you want, but it has its negatives in that they're very difficult to remember. And so you basically just can't remember them.
But there are solutions to deal with that. So for instance, people will translate Bitcoin addresses into QR codes. They're kind of like barcodes, except it's a square instead of a rectangle. And you're scanning dots instead of lines. And somebody's phone or computer can read that and translate it back into a Bitcoin address where they can then copy it to their clipboard or whatever and use their Bitcoin program to send you some Bitcoins.
Right.
There's also wallet software where you can manage several different addresses under the umbrella of one single wallet that belongs to you. So there are ways to manage the problem of having lots of different Bitcoin addresses.
And in the reasonably near future too, there are other projects that actually attempt to take this and really simplify it by using essentially a dynamic name system where, like, if my name on this system is Adam and you want to send me either communication or, Bitcoin or whatever, you just send it to Adam, and then my name automatically generates an address, sends it to your system. And so we're able to do business just as if there's no addresses at all. And it's all being done in the background in a very secure fashion. That's not out yet, but I expect within this next 6 months, we will see that.
Really, the key point is that you're not sending to a person, you're sending to a Bitcoin address. So that's what makes Bitcoin pseudo-anonymous or pseudonymous, right? On one hand, there's this public ledger of all the transactions of Bitcoins that have ever been done. So in one way, it's very public, very trackable, very transparent. On the other hand, unless somebody gives you that information, you don't necessarily know who those addresses all belong to. So it's got this very interesting quality that most other money that we're used to dealing with, or most of their currency that we're dealing with, really does not have, right? Except maybe cash. Cash is kind of anonymous unless you kind of know who's holding the cash in their hand. It can be used more anonymously than, for instance, like a bank account.
I would say when I rank the bits, it goes Bitdoor, Bitboard, Bitman, and then right there in that fourth place spot, it's like back and forth between Bitcoin and Bitcoin.
So there are some definitions that are kind of core to understanding Bitcoin. And with any sort of technical subject, there's always kind of the jargon. So I really want to go through these terms and kind of break down what they mean. The first one that you'll hear when you deal with Bitcoin, or really any of the new type of cryptocurrencies, is this idea of a decentralized protocol. At its core, this means that instead of there being a Bitcoin company that runs and operates Bitcoin, Bitcoin really is just a set of rules that live out on the internet. It's called a protocol because, again, it's like if you follow these rules, then you can do this. So it's an opt-in system for essentially money. In the case of Bitcoin, that decentralized protocol is followed by people all over the world, both users who want to spend Bitcoin and earn Bitcoin. They follow the rules by running the wallet software on their computer. Or on the other side of it, you've got people who mine, and they're trying to follow a different set of rules, where essentially they're playing a game. You can think of it like a lottery or a global game of bingo, where every 10 minutes someone gets bingo, and that bingo is a block. And so there are different types of ways that people can participate, but the important factor is that they all choose to participate because they view it as being in their best interest to do so. So they feel like they can make money or do something that they couldn't do otherwise, or have more safety, or whatever their particular motivation is. They are choosing to participate as opposed to participating by default. And because of that, and because there is no central entity, it means that it's a very robust system, because you could have large sections of the internet go out. You could have, if there was a Bitcoin company and it was located somewhere, even 2 or 3 places, then those are distinct points of failure, where if something happened to the Bitcoin company, then something might happen to Bitcoin. But because Bitcoin exists in this weird sort of decentralized, nobody's really in charge of it, but everybody kind of gets to participate in it, fashion that these protocols develop in, it makes it so that there actually is very little risk to the protocol. There's risk to individual participants who use it, but to the protocol itself, there just isn't really much that can be done to it, because, as is often said, you can't hold a gun to algebra.
Right, exactly. So it becomes this almost like an organism, like it becomes like an animal that's been kind of released into the wild, and now there's no way it can be put back in Pandora's. I guess I'm mixing metaphors, but
there's too many variables. Whenever you're trying to identify something, you really try to look for the points where it has the most, the most pressure, the most tension, right? Because those are the points oftentimes that will define it, because they define the largest challenges that it faces. And with Bitcoin, those challenges are all based around things that are not Bitcoin. Bitcoin at its core is actually very simple. It's just a set of rules. People can choose to follow it. The thing of it is that some of those rules and the way that especially identity works kind of conflict with the way that some of the regulatory environment in the world exists. So we're not going to get into that here. That's what we talk about on the show most of the time, it seems like. But like the challenges that are ahead for Bitcoin are actually both helped and hurt by the fact that it just can't react because it's just a set of rules.
EasyDNS is the Swiss Army knife for your domain names, helping meet their customers' individual needs since 1998. EasyDNS has been an outspoken critic of SOPA and CISPA. EasyDNS was an early supporter of Bitcoin, and now they are proud to sponsor this show. Do business with a company that shares your values. Get a 13% discount when you pay with Bitcoin. Go to bitcoin.easydns.com and be sure to use discount code LTB. You're listening to Let's Talk Bitcoin, the premier audiocast providing news and insights that cover the rapidly evolving world of digital money. Our twice-weekly shows include analysis of late-breaking news, updates on key technical, business, and regulatory issues, and in-depth interviews with the key people driving the new digital economy. Let's Talk Bitcoin offers sponsors an attractive way to reach a targeted and savvy audience. For more information, email sponsors@letstalkbitcoin.com. So you've probably heard the phrase Bitcoin mining or heard about Bitcoin mining before. And, you know, what that's associated with in the popular media, I guess, is people running these specialized computers and getting Bitcoins out of thin air and getting money for nothing. And as we'll see in a minute, that's not quite exactly true. But like Adam mentioned just a second ago, mining isn't really a great phrase for this activity. It's more like bingo or a lottery that somebody wins about once every 10 minutes and then gets a reward for doing that. The Bitcoin network is basically connections of computers to one another all around the world. It's a peer-to-peer network, just like file torrenting or file sharing peer-to-peer. And peer-to-peer means just your computers connected to some other computers and they're connected to some other computers, and pretty soon you got a big network.
On the one hand, that's what it is. But I mean, think about it again, drawing it back to the analogy, P2P just means person to person. So again, it's just that cash transaction thing. There's no middleman happening there. So how do we create money? I mean, like this is the thing, is that one of the reasons why Bitcoin is such good money, and this is something that actually a lot of new people have a hard time understanding. It's difficult to see the value in Bitcoin if you don't understand why the money that we have in the rest of the world isn't that good as money. You know, if you can't understand why something is bad, then it's hard to appreciate why something else is good. And I think that's kind of the core of this problem here. The reason why something like gold historically has made good money is because it's universally accepted and strictly limited in terms of supply. The strictly limited in terms of supply is a really, really important part of this equation. And Bitcoin goes out of its way to accomplish this in a very similar way to how gold does. You know, just as you mine for gold, you also mine for Bitcoin. And that's true in like you put work in order to generate whatever it is that you're trying to generate. In the case of gold mining, it's you put work or money into mining gold and then you generate gold. In this case, essentially what you're doing is you are devoting computational resources. So early on in the network, this started off as people's individual computers, and then it became people's computers that were good at playing video games, and they would use the cards that power the graphics of the video games in order to mine faster. And so over time, it's become actually a very highly specialized field. But at its core, that's what it is it's a global bingo game where every 10 minutes or so, somebody wins one of these blocks. And the important part about it is that it scales with the number of people who are playing the game, right? If there are 2 people playing the game, then it's supposed to, in a perfect world, this doesn't always work out, it's supposed to scale so that they find one block every 10 minutes. And if it's got 10 million people in it, it's supposed to scale so they've got find one block every 10 minutes. And so what that means is that the more people who mine, the harder it is for everybody else to mine. And so this creates this like self-balancing system where based on the price of Bitcoin compared to the price of electricity, you wind up with a system that balances out for how much currency should be issued and who should get it, because the people who get it are the people who are willing to put the most amount of resources into it. And then they get the permission to essentially sell it, be the first to sell it onto the market, or to hold it and speculate on its future value. But it's the process of putting value into it that's important, because if you can just, like Stephanie, if I could just turn on my computer and be like, hey, I'd like to create 1,000 Bitcoin today, then Bitcoins wouldn't be trading at high prices. Bitcoins would be easy to make. And so who would care about having them? Because why would you buy them when you can just make them yourself?
It's a controlled rate of inflation or Bitcoin creation that doesn't need a central authority to enforce. So we don't need the Federal Reserve of Bitcoin to issue the inflation rates. What we have is a mathematical algorithm that automatically adjusts based on the number of people who are mining or attempting to do the proof of work to create Bitcoins. And the creation of Bitcoins is kind of decreasing at a controlled rate. There will only ever be 21 million Bitcoins. It's built into the Bitcoin program. And we're asymptotically approaching that amount of Bitcoins. Right now, there are about almost 12 million Bitcoin, thing like that. We're about halfway up that curve, a little more than halfway. So the next 10 million Bitcoins, or however many, are going to be gradually mined over the next several years, decade or something like that.
It's actually about 100 years. Bitcoins have a terminus mining date in the year 2140, which was a fascinating number for me. And again, this is a really important point. Because Bitcoin isn't competing against systems that are perfect, right? Bitcoin is competing against systems that we have now. And I don't think anyone is going to make the claim that they're perfect. When you compare Bitcoin and this long, slow, predictable rollout of the currency over the course of 140 years, where we now in the year 2113 can say, okay, in 80 years, I know about how many are going to be out in the economy. You compare that to any monetary system that we have today, and that is so science fiction, it's just not even funny. I mean, the Federal Reserve in the United States, we are literally adjusting and, re-examining monetary policy every 3 months, which means that at any point in time, 3 months in the future, the monetary policy of the currency could change. And when it does change, chances are pretty good it'll be to the detriment of the people who are holding it.
Right. It's very unpredictable, but the one thing that you can kind of predict about that is that government's going to keep kind of inflating your money gradually, and you don't have much control over it. And it's probably going to be to your detriment.
But I mean, the problem there is that even if they stopped, Stephanie, like even if, they were like, oh, well, you know what? We've decided that it's bad to inflate. Then even then, you're going to have people who have made decisions on their past actions and are locked into them. And so this is the core thing, is that Bitcoin doesn't care who you are. It doesn't care what you do. It doesn't care. If you want to opt in and you want to follow the rules, then you can use the system, and it will probably benefit just about whatever you're doing, because it's a much more efficient way of doing, of conducting commerce or doing financial business than really any other system that we have available to us at this point. But on the other hand, if you don't want to follow the rules, then you can't break the rules. You just don't have to participate.
Bitcoin. Of all of the bits, Bitcoin is probably my I don't want to say it's my favorite bit.
What is Bitcoin? It's Bitcoin. It's like when you get like an email and then like you don't answer it for a while, so then like this little chime goes on to let you know that you have an email.
Bitcoin was the first digital cryptocurrency that follows this kind of pattern, that has this kind of system. But there are others, right, with slightly different rules. So if you don't like Bitcoin, but you maybe like Bitcoin with a couple of tweaks, there could be options for you too. So it just really gives people a very nice amount of choice.
Cryptocurrency is really interesting to me because it's such a free market. There's almost no friction once you get into cryptocurrency. Buying Bitcoin, and we're going to talk about this in a second, can be a little bit difficult because it just doesn't interface well with the existing financial system. And so if you have your money in a bank account, then it can be a little bit difficult to get it into Bitcoin. But once you get past that, then there's no barrier. If you want to, for example, trade Bitcoin for the second most popular cryptocurrency out there, Litecoin, then you can do that on any number of exchanges. It's very easy. It takes seconds, and there's no trouble whatsoever. The ecosystem of cryptocurrency, I think, ultimately is what's going to be so interesting, is because as Bitcoin gets to be more expensive, I used to think that Bitcoin was going to be the only cryptocurrency out there, but I'm realizing that there are niches for little currencies and little, specific things that do specific jobs better than Bitcoin can, because Bitcoin is doing so many things, and they can just all use Bitcoin essentially as like the highway. And then each one of these little currencies is an off-ramp, and you can stay there for as long as you want and then move back into Bitcoin. And so Bitcoin provides that sort of global structure that we've been talking about.
In so many ways, it's an innovation in money, and it's something that was long overdue. There's a lot of problems with the existing financial system, but we don't have to tell you that. You probably already know. One thing that we didn't mention that I think is really important is the nature of Bitcoin transactions. They are irreversible, which is also very different than what most are used to when they think about spending money. Well, if you dispute a credit card charge, you can reverse it. If you send somebody a check and they're ripping you off, you can call the bank and tell them to stop it and put a hold on it. But with Bitcoin, you can't do that. So once you send, that Bitcoin is gone. Unless the person maybe agrees to send it back to you, you can't get it back. That's another element about Bitcoin that's really interesting and probably can offer some advantages, because there's not really a lot of options currently in the legacy financial system that have that property of irreversibility.
Well, it's a good thing and a bad thing, right? You want something to be reversible if you've screwed up and you want to get your money back, and you don't want it to be reversible if you're selling something or doing something like that, because, again, it's not that refunds necessarily are a problem. It's that forced refunds are a problem, where it's the payment processor coming in, not really understanding what the situation is and just making a judgment because they don't really care. It doesn't really impact them. They just have to pick, and then whatever they pick, that's the way it's going to be. Bitcoin takes that option away, and it makes it so that buyers and sellers have to actually negotiate it with each other and say, okay, well, this is not what I ordered. Then if there's a valid reason, then you process the refund. But it's not this just like de facto, oh, somebody complained about one thing, so that means full refund, instantly take it out of the merchant side.
That Bitcoin was my life, I would tell you, show enough, show you right. What else can I do? I'm so inspired by you, and I'm just holding for the longest time. Once I knew my stocks and bonds were gone, I knew Satoshi Nakamoto was the one to come and save me. Encrypting money memory, and I'm just holding for the longest time. Hold for the longest time. Hold for the longest. Don't panic, the price will rise and fall. Ultimately, we're breaking through the wall. The sky's the limit, and I'm aiming to win it. So I'm just holding for the longest time. They say this couldn't last very long, but I saw the light and knew you were wrong. Baby, I've been hoping too hard, but you've seen the price, and it's just gonna grow more. March 11th, orphan blacks were slow. Doubters panicked and let their bitcoins go. I took my chances, took all the loan advances. Now I'm just holding for the longest time. Hold for the longest time. Hold for the longest time.
Now that we've given sort of a basic overview of what Bitcoins are, people are probably wondering about some practical applications of this kind of technology. So, how do people get Bitcoins, and how do people keep their Bitcoins or prove that they own coins? How do people transfer Bitcoins from one place to another? Let's talk a little bit about that.
Well, there are lots of ways to do things. Bitcoin, because it's an opt-in system, right? Anybody can just choose to make something. So there are lots and lots of tools out there. The ones that I personally use, primarily for buying Bitcoin, I use Coinbase.com, which is kind of like an exchange, but not in the conventional sense, because they don't hold dollars. Instead, what you do is you link your bank account to your Coinbase account, and then you are able to sell Bitcoin to them or buy Bitcoin from them. And it tracks the Bitstamp exchange price pretty closely. And then it just goes through a direct transfer to or from your bank account automatically. The interface is really nice. It's really fast. It takes 2 days to either make a buy or make a sell, which compared to, something like Mt. Gox is incredibly fast and very, very easy. And the fees are quite low. I think they're less than 1%.
Coinbase is a great option. I use a bunch of different methods to get Bitcoin. Sometimes, you want the convenience of being able to directly, just pull cash from your bank account and link it to Coinbase and get some coins there, or sell Bitcoins maybe and deposit the cash right back into your account. If you're one of those people who wants more privacy with your Bitcoin purchases, because frankly, Coinbase is not private, nor are any of the exchanges, because they do get identifying information from you. You also have the choice to purchase Bitcoins from an individual with cash. That's probably one of the most anonymous ways of getting them. You can meet people to buy Bitcoins through localbitcoins.com. It's a decentralized kind of thing, kind of like Craigslist for buying and selling Bitcoins. You can also work for Bitcoins. So you can, if you're a freelancer, if you have an online business, you can start accepting Bitcoins in exchange for your products. There are many APIs that you can integrate with your website to take Bitcoin payments. Coinbase has one, actually. There's also BitPay and Bips, or you could just kind of get your clients to pay you Bitcoin if they have it. BTCE is an exchange, Bitstamp. There's so many, I can't even really keep up with them now.
None of these are tremendously user friendly. I mean, this is the core thing, is that if you are familiar with like Forex trading or foreign exchange, that sort of thing, then this will feel right at home with you with some of the nicer platforms. If you aren't comfortable with that, if you're not familiar with that, then these can be quite hard.
There's also a service called cashintocoins.com. You can go there and you can deposit cash at the bank account of Cash Into Coins, and then you send them a picture of their receipt. They've got instructions on their website. So that's another way to buy Bitcoins with cash if you don't want to bother with local Bitcoins.
So there actually is one other that is an interesting way for merchants specifically, or for people who do services. There's a site called coinvoice.com. So it, like, you could think of it like coinvoice.com. But basically it lets you send your client or whomever a bill that's denominated in US dollars. They pay the bill, and then you never see the US dollars. Instead, you see Bitcoin, and you have Bitcoin sent to you. And I think that they take like a 2 to 3% fee. I can't recall which, but that's a way to completely avoid all of this and get paid for Bitcoin without having to have your customers actually know what Bitcoin is or have Bitcoin to pay you.
They do charge a fee, but they're providing a service. So there you go.
Well, yeah, I mean, there's a fee no matter what you do. I mean, that's the primary thing, is that there are no good solutions in this space right now that don't involve some sort of cost. Simply, I mean, do you think there are? I mean, if you buy from local Bitcoins, you're paying a premium, definitely.
I'm a freelance voiceover artist. So I meet a client and I say, oh, I'll give you a 20% discount on my services if you pay me in Bitcoin. And they say, oh, that sounds great. And I say, here's my Bitcoin address, send it to this address. And then they do. There's not much of a fee on that. It's just basically trading labor for Bitcoins. Right.
Absolutely. Absolutely. If you can find people to trade with who are able to do that with you, then yeah, absolutely. That's the case. But Stephanie, I think that both you and I kind of live in a world that has a little bit more Bitcoin adoption than maybe some of the newer listeners are familiar with.
Yeah. Absolutely. But, I hope maybe by the time some people are hearing this podcast, I hope this will be kind of timeless, and maybe at some point it will be a lot easier to do that and just say, hey, I'd like to be paid in Bitcoin. And your client, if you're a freelancer, can say, oh, sure, I know exactly what that is, and I'll be happy to do that.
Okay, so the price right now for Bitcoin is somewhere between $500 and $700, because we're recording this during the absolute peak of what might be a mania, or perhaps the new normal with Bitcoin. You never really know.
Well, perhaps this will be low.
Right, exactly. Exactly. You just never really know. So the point is that, Stephanie, you and I have both been kind of doing business. You do advertisements and you do voice work for the show. And I actually underpay you a little bit from your standard market rates, because I pay you in Bitcoin and because we do, business kind of frequently. I think probably that with the price increases, you're doing pretty well on those spots that you did for me, 6 months ago. Have you managed to hold on to any of those Bitcoin?
Right. The fact that Bitcoin is behaving as a deflationary currency, it's worth more if you hang on to it, has really encouraged me to think about my spending and, how I can save as much as possible. So yeah, a lot of my Bitcoins that I've earned through working, I have held on to. I have not sold. Some of them, I had to sell for one reason or another, bills to pay or whatever. So some of them I did sell, but a lot of them I hung on to, and I'm really happy that I did. So yeah, I was going to say, Adam, I don't feel like you're underpaying me, because I know if I just hang on to those coins for a little while, then they'll probably be worth more. So it's really a great incentive for saving, which a lot of people culturally did not grow up with. I, at least, for a lot of my life, I'm 29 years old. So growing up in the US, for a lot of my life where I was spending money, where I was having to worry about paying my own bills and stuff, it didn't really make sense to save, because, that we have some rate of inflation. Your money's not going to be more valuable over time by just sitting in a bank account. And so the incentive is to save it or to find some kind of investment to put it in. Whereas with Bitcoin, it's very different. If you save it, you're likely to have more purchasing power or more value after some time goes by. So there's this real strong incentive for saving, which I think is fascinating.
Yeah, that's been my experience with it too. I try to get as many services as possible from Bitcoin, and there are people who give me a larger discount than you do, and I get notes from them. Like the last couple of weeks, it's been crazy. As the price has gone up, they're like, you were the first person who I dealt with in Bitcoin. I charged you less than I ever charged anybody else, and this was the most profitable. We had 5 business cards made for 5 Bitcoin at the time. At the time, it was like $400 for like 10,000 business cards, for a couple of different
business
people.
Cards.
Yeah, exactly. But now that's like $2,500. It's like almost $3,000 at these current prices. So the incentive is huge. And yeah, I totally agree with you, Stephanie. The cultural drive to save growing up, I simply did not have it. It made way more sense to spend the money. Why keep it? It's better to.
It makes more sense to take out debt, actually, because when you pay back the debt, you're paying it with less valuable dollars.
And because
you actually have the opposite incentive to borrow money.
And I don't know. Do you have a student loan? I have a student loan. I took that with the idea that, okay, well, it doesn't matter if I'm spending, this money now because I'm going to earn so much more later from these skills that I'm developing. But sometimes, the math stops working with that after a while. With Bitcoin, the math is very obvious. If you don't spend them, they probably will be worth more later because there are not that many of them being made and because the demand for them that is potential is quite huge. So it's very simple. And I like things that have simple incentives. They make it so that I know what to do as opposed to wondering if I'm making the right choice or not.
Bitcoin is a currency. It's a currency that it's not necessarily a monetary currency, but it's a kind of a bartering system that we have with the other companies in our building where you can swap sodas or snacks.
Bitcoin. Glad you asked. Bitcoin is a form of currency for drug dealers. It was invented by the Winklevoss twins, or as I call them, the Winklevi, who are, of course, the twin brothers who invented Facebook.
There's one way to get Bitcoins that we didn't mention. That's because I hesitate to mention it because it's not a good way for somebody who's new to get into Bitcoins. It requires a huge upfront investment, a bigger upfront investment than most people are probably willing to make if they're new. And that is by mining. So as we mentioned before, when people do the proof of work to process Bitcoin transactions to create the Bitcoin network, they are engaging in mining, and they're using their computing power to contribute to the Strength Bitcoin network. And as such, somebody who is participating in that activity gets a so-called block reward, which is some amount of Bitcoins. It's 25 Bitcoins per block right now. And a block is just a amount of transactions bundled together that it's called the blockchain and so forth. Anyway, so the block reward is like winning the lottery or winning the bingo, and it provides an incentive to mine. Nowadays, it's getting so difficult to mine. You used to be able to do it with your computer, like you mentioned, Adam, just a regular old computer or maybe a graphics card that was made for gaming. Now you really need specialized equipment to mine, and these are machines that are built specifically for Bitcoin mining and no other purpose. And furthermore, they're getting rapidly obsoleted as the technology continues to improve at a rapid pace. In a couple of months, these machines are obsolete because they can't keep with the now increased difficulty as time goes on the Bitcoin network. But the point is, if you invest in specialized mining equipment, and if your mining equipment is able to keep up with the difficulty of the Bitcoin network, you can make Bitcoins by mining. However, is it profitable? It's not really designed to be profitable. It's designed to create an incentive to participate in mining, but not so much of an incentive that it's wildly profitable. It's kind of one of those things that if it's being done right, and the Bitcoin network adjusts automatically, so it's usually being done right, it is not wildly profitable. It's barely profitable. And it may take a while to break even on the investment that somebody makes in the hardware that's required to mine. So mining is a way to acquire Bitcoins, yes, but it is not a way that I would recommend for people who are new to Bitcoins.
Yeah, it's not a simple way, and it's a function of Bitcoin's popularity. I mean, really, that's what it is that if Bitcoin wasn't seeing so many people wanting to mine, then it wouldn't be hard to mine. But because everybody, the first thing that people talk about when they get in, they're like, oh, you can create these with your computer and they're worth how much? What you don't pay for in money, you pay for in time, basically. So the people who are really seeing the crazy profits from the arbitrage from mining are people who mined fairly early. And, that, I mean,
Right.
fairly early is relative. Fairly early is like a year ago or like 6 months ago in some cases.
Or 2009.
I mean, 2009, certainly that is very early comparably. You said that mining is designed to be barely profitable, and I agree with you in the short term. But I think that, again, this gets back to that fact that Bitcoin is deflationary, which means that over time the price will probably go up because there's more demand than there is supply. So if you look at it from that perspective, if you don't have to sell the coins that you mine immediately to pay for electricity, and you can sit on them for 6 months, then probably they'll be worth a lot more in 6 months than they were now. So maybe it is highly profitable, just not immediately profitable. But to your point about people mining or not, yeah, it's totally a highly specialized field. You absolutely should not get into it. If you do, you should talk to a consultant. Are there mining consultants yet? There should be mining consultants.
Yeah, I believe there are mining consultants, I'm sure. And, one other thing I wanted to mention about mining, there have been a lot of stories, and I think this will continue to be true in the future, even more so. But there have been a lot of stories of people who pre-order mining equipment and they pay with Bitcoins, and then the company doesn't ship the product for a while. Meanwhile, the price of Bitcoins goes up. So not only have they basically overpaid for their mining equipment, but they also missed an opportunity cost, because if they would have just taken that cash and put it into buying some Bitcoins at the time when they bought the mining equipment, and then waited until the time when the mining equipment actually ships, then they would have had a lot more money than if they had just bought the mining equipment and waited and then tried to figure out how to break even on it. So in many cases, it can be more profitable if you're thinking about making an investment in mining equipment. Take that cash and put it into Bitcoin and see how that does.
Yeah, that's very true. That's very true. So I actually have an experience surrounding this directly. Back in July of 2012, I pre-ordered a jalapeno from a company called Butterfly Labs. Now, a jalapeno, it was supposed to be a little coffee cup warmer that was powered by USB and that would mine Bitcoin and also warm your cup of coffee. That would sit on top of it. And so at the time, Bitcoins were worth about $4. I pre-ordered one of these very small units for, I think it was something like 25 Bitcoin. They were supposed to ship in, I believe it was October, and that date slipped and slipped. And in November, I asked for my money back, and they told me they wouldn't give me my money back. By the time we got to November, the price of Bitcoin was up to about, I think it was $14 or $15. So the value of the money that I had spent in Bitcoin had tripled. And so what had been like a $250 purchase was in fact now somewhere more in the range of, like a $600 purchase. And so I was unhappy about that. And I tried to get my money back from them. They wouldn't give me my money back. And so I waited another 2 months and the price of Bitcoin was up another, 50% or something like that. And so I finally got them to give me my money back, but they would only give me back 11 Bitcoins. So I paid them something like 25 and I got back 11 and I wasn't going to get the product from them. So I took a loss of 15 Bitcoin. But then by getting that refund,
at least you got the 11 back, but
I know.
still.
And this is the point,
painful.
is that in hindsight, it was painful at the time, but I was like, I'm glad to be over with it. It was stressing me out. I was like, man, I can't believe I did this because my Bitcoins are tied up. Right. I'm never going to get them back. So I get my money back. And at this point, they're still saying, oh, well, we'll release in 4 weeks or 2 weeks. And it just kept getting pushed out. And so I got my money back and I watched over the next 6 months as the price went up to over $200. And I was like, wow, if I had kept my money in there, this would have been it was like a $20,000. I mean, it was crazy. The amount of money that would be spent on this particular unit just because I didn't understand the future value of the money that I was spending at the time that I spent it. It absolutely floored me. So if there's one thing you can learn from my experience, and I was very happy that I had gotten the refund because I wound up earning exponentially more than the Bitcoins were worth at the time that I sold them. So it actually wound up being a positive transaction for me. But a lot of people didn't have that same sort of luck in getting a refund. And so a lot of people were stuck through that. And that's a terrible thing. So when you're dealing with Bitcoin or any sort of deflationary currency, because I think these are going to be getting more common in the years to come, really make sure that you don't treat them like normal money. Because when you treat them like normal money, then you want to spend it. And with these things, you want to spend them when you can get a really good deal that captures future value. Like if someone's going to give you 30% off for something in Bitcoin relative to something else, then that's probably a deal that I would take. But if someone's going to give me 5% off for Bitcoin, then probably not. I'd rather spend dollars if I have them available to spend.
I think you're absolutely right about that. You really got to incentivize someone to part their precious Bitcoins.
Yeah, I mean, it's just different, you know, and you don't feel good when you make a bad decision like that, you know? If you're buying a product and you get it, then that's something like you paid for it, you got it, and so there's an immediacy that makes the price okay. But if you're talking about pre-orders especially, I will never pre-order anything again in Bitcoin. Any pre-order I make is now in
Right.
dollars, especially for things like mining equipment. But yeah, I mean, again, like with Bitcoin, the key is, will the value of the Bitcoin be better than what potentially spending the Bitcoin now could give you? Because if that answer goes in favor of Bitcoin, then you probably shouldn't spend it.
That's a great thing to talk about because there's so much buyer beware in the world of coin that people might not be prepared for if they're just completely new to it and unfamiliar. A lot of people compare it to a Wild West or something like that. And I wouldn't say it's a Wild West, but you do have to watch out for yourself, you know, and you do have to take these things into account, the potentially deflationary nature of Bitcoin, the irreversible nature of transactions, and also security and kind of protecting your Bitcoins and protecting your passwords and so forth.
Is the Bitcoin price in a bubble? Only time will tell, but one thing's for sure. Bitcoin video passes are on sale. Normally $75 for those paying in US funds. Visit bitcoinvideopass.com and spend only 0.1 to 0.2 Bitcoins, 0.12 Bitcoins at the time this was recorded, to access all the talks and panels from the October cryptocurrency conference. See how easy buying with Bitcoin can be and experience instant access as soon as you've paid without even reloading the page. Check it out at bitcoinvideopass.com.
Hi, this is Jason King, founder at Sean's Outpost, and you are listening to Let's Talk Bitcoin. Sean's Outpost is a homeless outreach in Pensacola, Florida, and we are proudly powered by Bitcoin. To date, over 13,000 meals have been fed to the homeless in our area, all purchased with Bitcoin and through the generosity of the cryptocurrency community. Read more about us at seansoutpost.com. Food, shelter, Bitcoin, everybody. Sean'sOutpost.com.
This is really the final point, and it's one of the key points. Right now, this is as hard as it's ever going to be. There are so many people who are working on solutions towards making it easier to really be able to safely feel secure about the value that you're storing in Bitcoin. Because right now, I mean, like it's kind of terrifying. You know, if you just have your Bitcoins on your computer, especially as the value is going up, it's like, wow, you know, I mean, am I safe? You know, what can I do to better protect myself? Stephanie, what are you doing with your Bitcoin these days?
Well, I actually, as the price has gone up, I've become more and more paranoid about Bitcoin storage. I just want to preface this by saying there's a funny article out there. It's a satirical piece, and they claim to be a computer security expert, and it's titled "The Only Truly Secure Way to Store Your Bitcoins." And he proceeds to list a list of steps that you can take to spend or to have Bitcoins completely securely. And it starts with fabricating your own computer chips out of sand and compiling the Bitcoin client yourself out of your own code, manually checking each line of digging a 6-foot hole in the ground, surrounding the edges with concrete, and then burying your computer and yourself in that hole. And obviously it's a satirical piece, but that's kind of how it can get. I mean, and it's funny because it's kind of true, right? There are a lot of ways that your security could potentially be compromised when using Bitcoin. Don't let that scare you away from using coins. Just, you know, take some reasonable precautions. Those precautions would be anytime your private keys or your passwords are on a computer that's connected to the internet, there's maybe some risk of malware that could log your passwords or log your keystrokes or whatever. If your Bitcoins are stored on a web wallet, so-called, which is an online wallet, like something like blockchain.info or the infamous former service that doesn't exist anymore, InstaWallet, or wasn't there another one like mybitcoin.com or something like that?
The core takeaway from me about the web wallets, okay, so there are 3 descriptors, right? They're secure web wallet. You can have 2 of these, but not 3. And at its core, that's the problem, is that Bitcoin is like, because it's such good money, when you store it online and you have a bunch of people all storing Bitcoin in the same place, it's like a giant piñata, right? Whereas the price of Bitcoin goes up, or the more popular the service gets, the bigger the prize is for breaking it open and getting inside. And so that's what we see happen, is that as these services get large, and especially as the price goes up, the incentives for hacking into them and stealing the Bitcoin that are inside just go through the roof. It's very, very difficult to run these services in a way where they're invulnerable to that. And we've even seen services services that were specifically saying they were specializing in security and doing everything right, they still get compromised. So just in general, save yourself the headache. Don't store your coins in online wallets. Store your coins somewhere that you have control over and ownership of.
I would add a little change to that, which would be, there can be usefulness to online wallets or web wallets, but really not for more than so-called pocket change amounts of Bitcoins. Like, don't store all your Bitcoins in a blockchain.info wallet, please, unless you have 0.01 Bitcoins or something like that, and you're not that worried about it if you lose it. But there can be a real convenience to web wallets. That's the thing. Like, if you have a blockchain.info account, you can get an email whenever you receive Bitcoins to that address or something like that. Or same thing with Coinbase. They have kind of a web wallet service. So these things can be really convenient, and you can take some steps to secure them, like two-factor authentication.
But they're a target.
Really,
it's just that they're
totally
a target.
Are.
It's a target. And so there are lots of software solutions that allow you to run Bitcoin on your computer. You can get physical Bitcoins if you don't even want to deal with running the software, although they do come at a premium.
Yeah, that's a very expensive way to get into Bitcoin. You can actually accomplish the same thing. A physical Bitcoin or a physical representation of Bitcoin is basically a Bitcoin wallet and a private key that exists on paper or on a little token that's called a casacious coin or some other way in the physical world that's not digital, it's physical. And through this, you can actually import the private key into a computer-based wallet, and you can move the Bitcoins from there. Or you could just give someone a physical Bitcoin, right? Like, you can transfer them that way, but you just can't break it up.
Right. Physical Bitcoins, they're not really like tokens, because really what it is they need to be redeemed, right? They're like redeemable Bitcoins. What I mean when I say redeemable, if I were to hand you a physical Bitcoin right now, we wouldn't actually be making a transaction on the Bitcoin network. Instead, what we would be doing is I would be giving you a wallet that is known to contain, let's say, 1 Bitcoin. You could then trade that to someone else for 1 Bitcoin worth of something. But at some point in that chain, if someone wants to use the Bitcoins online, then that physical Bitcoin does need to be redeemed, which involves peeling off the sticker and recovering the private key, which then lets you have control of the wallet. But as long as it's not redeemed, whoever holds the coin controls the wallet, even though they can't access it yet. If they choose to redeem it, they can access it. And at that point, the coin stops being valuable because you can't prove that the money is there and you haven't already spent it or don't have the ability to spend it.
So yeah, getting back to storing your Bitcoins. So there are different levels of security. The least secure would be an online or web wallet, also probably one of the most convenient. Another slightly more secure way would be to store the Bitcoins on a desktop client on your computer. So there's a couple of those. There's the original Bitcoin client called Bitcoin QT, or sometimes called the Satoshi client. This used to be the only program that you could download to your desktop for storing Bitcoins. The problem is it also downloads a copy of the entire blockchain to your computer, which is now something like 12 gigabytes or more. It takes up a lot of space on your computer, and it takes a long time to synchronize and download that whole blockchain. So people, for that reason, maybe tend to shy away from that client a little bit more, although some people do still use it. You can come up with a passphrase and encrypt your wallet on that. So as long as your passphrase isn't maybe stored on your computer or written down where people could gain physical access to it, and that's pretty secure, I would say.
Yeah, let's talk about encrypting your password real quick, because this is a commonality among all the wallets that you're going to do. Most of them will start not encrypted, right? And so what that means is if I have on my computer an unencrypted Bitcoin wallet and I, launch that program, then I can send Bitcoin and receive Bitcoin without having to type in a password, which also means that if somebody else either sits down on my computer and opens that software or accesses it remotely by hacking into my computer, which apparently is something that still happens. I just saw somebody else had it happen to them a couple days ago. Then they essentially, all they have to do is just access my computer, and then they have just as much ability to send any of my Bitcoins as I do. But if you encrypt it, essentially what you're doing is you're taking your private key, which is that thing that lets you behind the scenes spend your Bitcoin by assigning them to someone else, and it encrypts it with this password basically. So in order for you to decrypt and then spend your Bitcoin, you need to enter this password first. So instead, if someone sits down to your computer or hacks into your computer, then they need to enter that password too. So because of this, it's very, very important that you encrypt your wallet, because it means that there's that additional barrier to entry where unless you've like let out your password somewhere else, or your computer is really infected with something that's logging your keystrokes, which is pretty bad, I mean, as far as infections are concerned, then you probably will be safe. Even if someone has access to your computer, they still can't necessarily spend your Bitcoin unless they crack your password.
So some examples of that would be the Bitcoin QT client, or AKA the Satoshi client. There's also a couple of other programs that I think are worth mentioning, and those are Multibit, Electrum, and Armory. So Electrum and Multibit, as I understand it, are, desktop-based clients. You can do the encryption and everything. You can encrypt your private keys on your computer, and your password never goes to any server or anything like that, as I understand it with those programs. So it's not as though your password is being uploaded somewhere where somebody could potentially hack it and get your password, steal your Bitcoins. But what they do is access a copy of the blockchain that is stored on a public server. It's kind of the best of both worlds. You got the encryption going on your computer, but you are accessing the blockchain somewhere else so that you don't have to host the entire blockchain on your machine. So it's faster. It's faster setup. If you download one of these, what you do is connect to a server and you can start sending and receiving Bitcoins right away. They also have some other cool features, where you can store a bunch of different addresses within the same wallet. All of these desktop clients allow you to do that. And usually with a web wallet, it's one address. Sometimes they have a couple of addresses in there, but some web wallets are only one address, or it's a pain to figure out how to get multiple addresses in them. So we got Electrum, Multibit, and Armory is one that I know you use. Adam, personally, I use a couple different clients. I do have a blockchain.info account that I barely use for anything. I also have Electrum, Armory, and the Bitcoin QT client. Haven't really used Multibit. What else? I also use an Android wallet called Mycelium. That's one for your phone. There's also blockchain.info apps for Android and iPhone. And also there's some other ones that may not be available yet, but they're coming soon for iOS devices. And I also have physical Casacious coins and paper wallets. So I use everything. And I think security through distributing Bitcoins into different wallets and different methods of storage is a good idea as well.
I don't have any bases with Multibit. That's not one that I've used, but Electrum is one that I've used. And I think that you're right. It offers advantages from both worlds as far as, you get the security of a desktop client with the convenience of not having to manage the blockchain yourself. It's important to note that with Bitcoin wallets, there really is no such thing as a free lunch, and whatever you get, you also are giving somewhere else. So essentially, the downside to an Electrum wallet system is that because you're not maintaining the blockchain yourself, because you're not maintaining that ledger yourself, and instead you're relying on a third party, if that third party ledger is compromised, then you and everyone else who's relying on it could potentially be getting bad data. It's this push and pull between convenience and security. And you can't have 100% convenience and 100% security, at least yet. We're still waiting on things that might make it easier to do that. But there is always a downside. Armory also has downsides. Armory is my hands down favorite wallet. I think I have 8 wallets all using Armory, and that's compared to, 4 or 5 with all of the other clients that I use combined. And that's again because I like to have a different wallet for each project that I'm working on at the time so that the funds can be separated. It's very easy and clean. Armory is great because it's really all about making sure that you're not going to lose your Bitcoins. And so they have great backup features in it. And Alan Reiner, the lead developer on it, has been pioneering some really innovative and very new to Bitcoin features into that client as well. The good part about it is that it's really focused on security. It's easy to use once you kind of get the hang of how things work, and it's pretty self-explanatory. They've done a good job with the interface. The bad part about it
even has a feature where you can somehow store Bitcoin in offline wallets. What is that?
So when you create a wallet, you get the option of how you want to back it up. And what they encourage you to do is essentially to print a paper backup, where at any point in the future, if you take this paper backup and you type in, I think it's like a 32-digit long code split into groups of 4, then you can recover your wallet without knowing the password, without doing any of this stuff. So it's like a fail safe, right? So if I die and my wife doesn't know my password, but we've got one of these in the safety deposit box, she can get that out and recover it, even if for whatever reason she doesn't know my password or any of my information about it. Armory lets you do that. And they're also working on features, because the concern there, of course, is that, okay, well, what if somebody who I don't want to gets hold of this paper, then they have access to my Bitcoin and they're not protected by encryption or anything like that. So what Armory has done to address this is they've created multi-part or fragmented backups, where instead of printing one piece of paper, you print like 3 pieces of paper or 5 pieces of paper. And each paper is different. And in order to get the combination, in order to recover the wallet, you need to have, say, 2 of 3 or 3 of 5, something like that. So you can have a little bit more security. So again, you can tell that even in that case, it's less convenient, but it's probably more secure. So Armory, as far as, this security versus convenience side, is definitely on the security side, but it's getting much easier to use. Right now, if you try to install it, this is the middle of November, so this won't be the case for more than another couple of weeks. It uses quite a lot of RAM. I have 16 gigabytes of RAM on my computer, and it uses a lot. Uses a lot of RAM because of the way that it was originally built. But I'm testing a version right now that should be out in the next couple of weeks that uses maybe 300 megabytes of RAM and is so much faster and offers all of the same security features. So these problems are being solved over time. It's just an issue of what was done first.
All of these issues, developers have a great incentive to help solve these problems for people, to help make Bitcoin easier to use and more user-friendly. And it's just going to get easier from here on out, like you said.
Right now is the most difficult it will ever be, and it's going to get easier from here. And eventually, I mean, like Stephanie, I can see a future where I don't even know I'm using Bitcoin. A lot of times I'm using Bitcoin. It's just something that's kind of running in the background, empowering my transactions. Eventually it's going to happen. I hope I can always spend Bitcoin because I really like the feeling of these direct person-to-person payments in an internet-connected system. But at the same time, it sure would be nice if I didn't have to think about it quite so much sometimes.
One thing maybe we ought to mention with Bitcoin storage is the concept of creating paper wallets.
All a paper wallet is, you could take a piece of paper, right? Just a plain piece of printer paper or whatever, and just write down your private code on it. And that would functionally be a paper wallet. Because really that's all you need to do. And then so the reason why paper wallets are desirable is because if you have this number on paper, then you can, if you want to, remove that number from your computer. And if that number isn't on your computer, then it's not an issue of whether or not you've encrypted your wallet or not, because if someone does compromise your computer, the numbers simply aren't there for them to take because you've taken them offline.
Right. Then if somebody compromises your house or somebody compromises your physical wallet, then they might gain access to it. So it's just a different set of problems. But that's probably, I would say, would you say it's the gold standard now for Bitcoin secure storage to generate key pairs with an address and a private key offline with a computer that's never touched the internet, that's known to not be compromised, then print them off and, dig a hole, bury them, something like that, or somehow physically secure them so that malicious people cannot gain access to them. I think that's probably the most paranoid you can get. But then again, paranoia is only paranoia if you're wrong, right? People have had that Bitcoin stolen from their computers. So
no, this is very true. Yeah, absolutely. But I mean, the thing to keep in mind is that with Bitcoin, you get to figure out what your risk tolerance is. You get to figure out how much convenience you want versus not, and just treat it based on what your particular needs are. And really, that's the key, is that Bitcoin lets you do whatever the heck it is that you want. If you want to use it, whatever you want to use it for, however you want to use it, even if you're breaking the rules. This is why it has trouble with the conventional system, is because there are like limits to how much money you're supposed to be able to send. And there are people who you're not allowed to send money to. But Bitcoin really doesn't care about that, because again, it's just these rules that live in the sky. And if criminals decide to follow the rules, then the criminals get to use the system too, just like cash.
Bitcoin? What isn't Bitcoin? Next.
And so people just, you hit your keyboard, and it's sort of like an Easter egg type thing where once in a while there'll just be coins that pop out of your keyboard, and then you can use those to buy drugs.
I think we've covered the basics, but if you have any questions, like if you want to know something about how Bitcoin works that you don't think we've addressed here, let us know. You can send mail at letstalkbitcoin.com, or you can send a web inquiry through our website, which is letstalkbitcoin.com. And, let us know if you have specific questions. On some of our older episodes, we used to do kind of a segment called newbie questions or something like that, or just Bitcoin questions. And I wouldn't be opposed to bringing that back if people have questions that they want to send us.
Yeah, absolutely. I think that we're going to be moving towards a more interactive show again. You know, Let's Talk Bitcoin has kind of floated around in terms of the format that we've followed. We're segment based. That's like the one thing that I can comprehensively say is we are segment based, and that will probably stay the case. But yeah, I mean, Bitcoin is a very much evolving situation, and Let's Talk Bitcoin is probably going to grow along with it. So, you know, Stephanie, I look forward to doing the next one of these when there's the whole next set of slew of innovations that we have to talk about because they're so new that nobody's heard of them yet.
Right, absolutely. Yep. So we will look forward to hearing from you.
Thanks for listening to episode 61 of Let's Talk Bitcoin. The new user show was produced by Adam B. Levine and edited by Matthew Zipkin. It featured Stephanie Murphy and Adam B. Levine. What is Bitcoin was performed and provided by Vuza, and although very funny, is quite wrong. Music was provided by Jared Rubens and Zhao Tong. What did you think of Zhao Tonged? I've got several other Bitcoin-related parodies that I think are quite good, but I'm not sure if they're appropriate for the show. Questions or comments? Email Adam at letstalkbitcoin.com. Have a good one.